If you're watching this and you've been trading for 1 year, 2 years, 3 years, etc., and it's still not clicking for you, you're still not profitable, then you need to watch this video. I'm going to break down 4 main topics that I have realized are pretty prevalent over the course of coaching over 1,700 people. These are some major pain points that I don't see talked about enough in the trading space. So I'm going to hopefully do that justice today. And the goal is something I say resonates with you today that can finally shift that tide in your trading career from inconsistent to finally consistently profitable. So make sure you stick around till the end of the video so you can get all the value out of this. And if you haven't already, hit the subscribe button because I post content like this every couple weeks and I would really appreciate your support. So one of the things that isn't really discussed enough is the situation that people find themselves in trying to trade while also being a full-time student or having a full-time job. Now, I haven't been a student for a very long time, so it's hard to speak on that, but I can relate it to having a full-time job. So before I got into trading, actually while I was getting into trading, I was a full-time carpenter. I had a residential finished carpentry business for about 7 years, and I was a carpenter for about 10 years. So I'm well aware of what it takes to manage a trading career while also managing an actual career outside of the charts. What I did when I was a full-time carpenter, working 10 to 12 hour days every day, 6 to 7 days a week, as soon as I would get home, I would have some dinner and then I would hop on the charts and do my analysis. Now, the cool thing about trading is that there's so many different ways to actually do it. You don't have to be a scalper sitting on the charts, executing during a certain session. So what I used to do back then is just set limit orders. And that's still what I do to this day, even though I have the luxury of being a full-time trader. So the beauty of setting limit orders is that you can do your analysis way ahead of time and set an order for where you think price is going to go to and set your parameters around that, like your stop loss and your take profit. So that's really the beauty of trading. You can do that anytime that you have like 15 or 20 minutes to actually analyze the charts. You can identify trading opportunities and just set them up on your trading platform, and they'll execute those positions while you're out and about, while you're at work, while you're in class, while you're studying for an exam, whatever the case may be. Now, with that being said, that kind of leads me into the topic of swing trading versus day trading. If you're a full-time student, if you have a full-time job, or honestly just even a busy lifestyle in general, and you don't want to spend that much time on the charts, swing trading is pretty much the only option for you because it's the only way that you don't have to be locked into a specific session. So sometimes, for example, trading New York session could interfere with your class schedules or your actual work schedule, right? The only way to avoid that is, like I said, setting limit orders ahead of time and just letting them do their thing. So that leads into swing trading because you can't really do that on, for example, the 5-minute time frame or the 1-minute time frame if you're trying to scalp or day trade a session. You can't set limit orders and then just walk away from your charts. That would be incredibly irresponsible and unprofessional. However, if you shift your focus to higher time frames, such as the 1 hour, the 4 hour, the daily, the weekly, your trading won't be as frequent, but you're going to find higher quality setups. And they will be very easy to enter because you can literally just set your limits and go on with your life. The main issue that people have with swing trading, I find, is that they lack patience. But if you already have a busy life, like if you're a full-time student, for example, you don't have the luxury of being on the charts whenever you want, okay? You have other responsibilities. Same thing goes for having a full-time job. You'll probably get fired if you're found being on the charts all day. You have to be patient, and swing trading is the easiest way to do that. So utilize higher time frames, set those limit orders, and just go on with your life. Now, on this YouTube channel, I've taught many different ways to take advantage of that. I'm predominantly a swing trader myself, and I have shared pretty much my exact strategy on this YouTube channel for free. So I've taught you guys exactly how to do that. So if you haven't already, check out some of those videos and hopefully it can open your eyes to the possibilities of how freeing swing trading can actually be. Now, I'm not trying to push you towards something that maybe you don't feel comfortable with, but the thing is we have to think about this logically, right? If you don't have the time to be on the charts trading a specific session, like some full-time traders get to do, then how else are you going to make it work? Swing trading is the only option, really. So again, the beauty of trading is that there are so many different ways to find success. So many different strategies. There's no one size fits all. In fact, most strategies do work. The thing is, whatever strategy you resonate with, you have to cater that to your lifestyle. You have to tweak it until it works for you because each one of us is different. We each have our own individual problems and schedules and things that we resonate with and things that don't make sense to us. You need to figure out what fits your lifestyle the best and then go with that. So another issue that needs to be discussed a lot more is the fact that most beginners get sucked into trading solely on lower time frames. Now, say what you want about day trading and scalping, it's obviously possible, and for some people it resonates more so than any other style of trading. But the overwhelming fact is that most beginners have a very difficult time trading on lower time frames. When you're on a 4-hour time frame, for example, each candle represents 4 hours of data. When you're on a 1-minute time frame, there's just so many candles because they all represent 1 minute of data. So you just have so much to look at. So logically, it's going to be more complicated. I've always felt that it takes a more experienced trader to trade the lower time frames, at least consistently anyways. Obviously anything's possible, right? Like if you really want to trade those low time frames, then who am I to stop you? But again, you're just making it hard on yourself for no reason. I would recommend like the lowest to go on time frames being the 15-minute. That seems to be a really good happy medium between swing trading and day trading, low time frames and high time frames. The 15-minute is just a great midpoint. And that can of course allow you to have some more clarity, and it's just simply less data to focus on, which means your job will be easier as a trader. There's less to decipher. Now, another point to add to that is that the higher you go on time frames, the more weight those time frames hold. Now, I know this is repeated often. You've heard that before, I'm sure. But for example, a pattern or a key level or a retracement on a 4-hour time frame is going to be much more significant and present a high probability opportunity in comparison to something that formed on the 5-minute time frame that looks the exact same. Because on those low time frames, what we see is a lot of false movements, or maybe I shouldn't say false, but just basically liquidity is purged all over the place on low time frames. On a higher time frame, it's much easier to identify where liquidity is resting in the market, where it's most likely to be purged, and then you can do your job as a responsible trader to avoid being part of that liquidity purge and instead trading alongside with the market. Now, when you're on a lower time frame, that becomes not impossible, but extremely difficult. What happens with most beginner traders when they're glued to the 1-minute time frame or the 5-minute time frame, they're just getting chopped up all over the place, left and right, Every move that happens, they're part of liquidity, and then when price finally takes its course in the intended direction, they feel left out. And then they start entering the emotions of, FOMO or revenge. So again, why not just avoid all of that? Just go up a few time frames. Go to the 1-hour time frame, the 4-hour time frame. Or like I said, if you really want a low time frame, then stick to the 15-minute because that's a happy medium basically. I can almost guarantee you guys, if you make that small change and just shift your focus and stop listening to all these scalpers on YouTube, you're gonna notice a big difference. Number one, in your trading results, and number two, in your mental health and mental focus and clarity. Because there's nothing worse than being chopped up on a 1-minute time frame. And the stress that actually puts on you physically is tremendous. And unfortunately, physical and mental health have such a huge part to play in our trading careers and the decisions that we make on a day-to-day basis. So I try my best to limit stress as much as possible. And one thing that did that the most for me was actually transitioning to swing trading about a year ago. Now, I still do have a day trading portfolio and I'm active on that. That's mostly just because I'm a full-time trader and I have the luxury of doing so. And I've been doing it long enough now where it doesn't really stress me out. Of course, I have my ups and downs. Everybody has off days and gets stressed out. We all experience human emotion. Nobody's immune to that. But overall, I've eliminated the majority of my stress by trading higher time frames and also by tweaking my system to eliminate unnecessary losses, unnecessary emotions. And so yeah, I think if you take that into consideration, it could actually make a huge impact on your trading career. The next major issue that I want to discuss is strategy hopping, or as some call it, shiny ball syndrome. And that should be pretty self-explanatory. It's when you're doing something and you get distracted by something else and jump ship. Everybody's so obsessed with trading strategies for some reason. even though that's actually the least important aspect of successful trading. And I say that because pretty much every strategy in existence works and works well. So there's really no need to be constantly looking for some holy grail that doesn't exist. I know plenty of successful traders who trade support and resistance, trend lines, structure and Fibonacci like myself. There are so many simple, easy ways that could be taught to a toddler, for goodness sake, where you can be successful with it if you just stick with it long enough. Unfortunately, all over YouTube, Instagram, Twitter especially, or X as it's now called, it seems like every other day there's a new concept being shared with the promise of this finally being the missing piece, the missing puzzle piece to your trading career. And that's how it's marketed too. It's always like, guys, after all these years of trading, I finally found the secret. It's turtle soup, mitigation block, breaker, or something. How stupid do you have to be to fall for this continuously? I don't know who subscribes to this nonsense. It sucks because I see so many people fall for it. And if you don't understand by now that that's a marketing play to sell a product or a course or mentorship, then you just don't belong on the internet. You're going to have a tough time trading if you can't discern that information by now. It is clearly all marketing. That's unfortunately the angle that a lot of these educators have to take, because if they stop coming out with a new technique, a new strategy every couple weeks, their audience starts to die off. They don't sell as much as they used to. And unfortunately, the only way that they succeed is by keeping you on the hook. You're the fish on their hook, and they need to keep you there. Now, the other problem with social media, unfortunately, it can be a blessing in so many ways, but it obviously has its pitfalls, you know? When we see somebody really succeeding, doing better than us, maybe, we think to ourselves like, well, what am I doing wrong then? Like, why can't I be having those results, you know? And that will make you want to investigate what they're doing and then maybe do what they're doing, right? But the main problem is you're not sticking to anything long enough to actually see real results. So my best advice for you, if you're in this situation, just remember, every strategy works. The strategy is not the problem. The problem is the time that you're putting into it. It's not consistent enough. You need to stick with it. So given the fact that all trading strategies work, what you need to do, your job, is to find one that resonates with you. I personally don't like support and resistance or trend lines or patterns or ICT concepts. I wait for a break of structure, a retracement, and then I enter price based on a specific Fibonacci level. That's it. That's my entire strategy right there. That feels good to me. It makes sense to me. It's simple. It's repeatable. It's mechanical, doesn't require too much thought or emotion, and I can do it over and over again. So once you find something that resonates with you, don't get so easily distracted by social media results. Don't get distracted by a nice watch or a fancy car. If you want to be successful, you need to create success for yourself. You need to do it on your own. You have all the resources at your fingertips. We live in the best time in human history for information and earning money in alternative ways that were unheard of a couple decades ago. Take advantage of it, but don't get distracted. You have to be disciplined. You have to stay on track. The last topic that I'd like to discuss today could be the most important, and I think it's going to hit home for a lot of you. And I'm actually going to get pretty vulnerable myself here, because this issue that I'm about to discuss is something that I've been dealing with quite a bit throughout my trading journey as well. So this is kind of a three-part topic actually: greed, fear, and losing streaks. These are so detrimental to most traders. So really listen carefully here, and hopefully you can gain some value from this. So the main thing that I struggle with in my personal trading is actually greed. I don't really like using that word, but at the end of the day, that is what it is, you know? I guess it's subconscious because I don't think of it as just like trying to hoard money and just get as much as possible. That's not how I go about my trading. One of my issues is that, and I guess I should be pretty grateful for this, but I've been quite desensitized to money. There are certain dollar amounts that just have no significance to me anymore. And so sometimes when I'm in a trade, for example, and it's up multiple 4 figures in profit, it doesn't feel significant enough to me until it hits that 5-figure mark. And that is so unhealthy. I'm well aware of that. I recognize that it's not good. But when you reach certain levels, it's kind of hard to accept any less than that. When in reality, it's okay to just stack up small wins instead of trying to hit home runs, you know? So I need to be patient and build up my capital more over time, because you can't hit those home runs consistently. What does happen all the time though, pretty much every single day in the market, is opportunity for small base hits instead of home runs. It takes a lot of discipline to stick with those and not try and aim higher. And all it takes is one time where you close a trade early, or maybe your take profit was too modest, and then you see price go well beyond where you were targeting, and you think to yourself, man, I could have made so much profit there. That's insane. All it takes is one of those instances, and that can screw up your psychology moving forward, But it's a work in progress, I've been doing this for over 6 years now, and I still struggle with things like that from time to time. Nobody's perfect. And the thing about trading, which is kind of a blessing actually, is that it's a constant progression. You can never be perfect at it. It's just a constant personal development, and it makes you work on the bad things about your personality actually. So it can be beneficial for your trading results as well as your own personal life. The next thing would be fear. A good example of fear in trading would be when you're in a profitable trade, it hasn't got to your target yet, but you close it early. You're so scared of holding that trade and watching your profits disappear that you just want to secure those profits as soon as possible. Now, securing profits doesn't necessarily sound like a bad thing, but in reality, you're skewing your numbers if you keep closing trades too early. It would be beneficial to close losing trades early, but then let winning trades go to completion. If you're consistently closing profitable trades early, then your winners are likely going to be much smaller than your losers, which then offsets your overall profitability and will likely put you in the negative. Another example of fear in trading could be managing your stop loss too aggressively, like trailing it into profit or break even too quickly. Let's say you get a few points into profit and then you just immediately move your stop loss to break even. Then you're going to be constantly taking break even trades and not making any money. You're literally just sabotaging yourself. A lot of traders struggle with this, unfortunately, and it sucks to see. But the truth is, scared money doesn't make money. The name of the game is risk. We need to manage risk professionally, but at the end of the day, we're putting our money up for risk in order to make more money. That's what trading is. If you were comfortable entering that trade to begin with, then you should be comfortable letting it go to completion. Whether it's a loss or whether it's a win, just let it happen. You entered that trade in the first place. Don't go back on what you analyzed. Trust yourself, trust your analysis, and just continue trading your plan. Last but not least, losing streaks. This is what messes up so many people. And I get it. It's tough to deal with, Winning streaks are easy. Winning streaks are great. When you're winning, you feel like you're on top of the world, right? But if you experience a few losses in a row, that can mess up so much hard work that you put in prior to that. You need to be tough as nails when it comes to losing streak. You need to be stoic and basically emotionless. I know that's kind of impossible because we're all human, right? We all go through emotions, especially when we're seeing our capital go down or taking a hit to our egos because we're not as good as we thought we were maybe. But one thing I like to remind myself of is that this is all just digital stuff. Like, it doesn't really affect me in my real life, I could lose all my money. I could be the worst trader in the world and I'm still me. I still have my life. I still have my family, my friends. Trading doesn't define who I am. Additionally, I've been trading long enough and trading a specific strategy long enough that I know wholeheartedly a losing streak doesn't last long. Having experience with your strategy and having data to back that up can certainly mitigate, not eliminate, but mitigate a lot of the emotions that you can go through during a losing streak. And it can help you last until that losing streak is over and you start winning trades again. Well, everybody, we've made it to the end of the video. I really hope I provided some value for you all today. Hopefully something I said you take with you, and I really hope that it can change your trading career. In fact, I know that it can if you apply it. I appreciate each and every one of you. If you haven't already, please subscribe to the channel. And if you found value in this or have a question for me, I'll try my best to get back to you if you leave a comment down below. Thank you all, and I'll talk to you all soon.